The monetary policy decision is out from the European Central Bank, and the ECB has kept its benchmark rate at a record low 1%. It is what 55 out of 57 economists expected, so pretty good batting average for those economists for a change. Sara, Scarlett, and our economics editor, Mike McKee, are here to talk a bit about the implications of what the ECB just did, and more importantly, perhaps, what we may get from Mario Draghi and other policymakers a little later on this morning.
And the European Central Bank has arguably become one of the most important central banks right now in fighting the debt crisis, where leaders have failed to come up with a solution. The European Central Bank has bought time, which is why everybody's going to be glued, Michael, to the press conference where Mario Draghi is going to be taking questions from reporters.
Yeah, they do things a little differently than the Federal Reserve. Federal Reserve puts out a long statement right when they make their decision on what they decided to do. The ECB only tells us what it did with interest rates. So if there's any other monetary policy, not that we're expecting something today, it comes during the president's press conference. That's why the focus is on the press conference, not because of new policy, but because what he says about Greece and whether the ECB will participate in the bond restructuring that's going on there.
Mike, tell us what are the options that the ECB has when it comes to helping or not with the Greek sovereign debt.
The ECB has between $40 and $50 billion worth of Greek bonds. And with the private sector exchanging their bonds, it leaves the question of all those, what they're doing, that the ECB holds. Well, the ECB doesn't want to take a loss on those bonds. So there's talk of them selling them to the European Rescue Fund, which could then turn them back in. The problem that you'd have there is if they do that, what does that mean for all the Irish bonds they hold, or the Portuguese bonds that they hold? Do they continually get involved in these bond restructurings if those happen? And if that's the case, do they then become reluctant to buy bonds from those countries as they've been doing and make it much harder for them to sell?
But if they do that, it certainly alleviates some of the pressure and some of the Greek debt, which is at the heart of this issue. Don't forget, the European Central Bank has been very active with that long-term loan facility to banks, the aspirin, really, as Bill Blaine of New Edge calls it, for the European debt crisis, and they're prepping another one. So we'll also be waiting to hear any comments about what that's going to look like, how gigantic it's going to be, and what kind of need there is for it.